All right, guys, welcome on. Now it says the Zoom is a private broadcast. I'm not too sure why. See what happens. Maybe it will unprivate itself in a minute. Let's get on. All right. Welcome everyone. Now it's still saying private, so I don't know if I can't see the comments yet. See if anyone's on. I'm just gonna refresh the page and see what's happening. Maybe it's just me. All right. I think so. Anyway, welcome guys as you're coming on. It's been a pretty interesting one with the markets and everything that we've had going on. Now, I want to make sure that I put it out there that, price action has been pretty fantastic, so far so good. What I want to do is, without wasting any time, I want to get on with looking at the charts. All right, now the NFPs I chose not to trade. I didn't even go live for it. I just chose to focus on doing other stuff, and I've been pretty busy recently. So, it's been an interesting one. Now I'm going to delete all my markings for the dollar index, and we're going to have a look at it again to see what we had happen. Now, what did we have actually happen now? Okay, since this time that we've been speaking about from the initial move. Now, if we recap what we had happen here, it happened pretty much like the scenarios that we had played out. So I'm going to start from there. Let's go over to the dollar index. Now, am I sharing the right screen? Yeah, I am. But welcome on as you come in, guys. It's good to have you. Now, with the dollar index, let's get straight to it. Now, remember what I said to you about this price action here, the liquidity that we had. Now, this demand order block over here was the bottom range of what we're looking at. And the top range of what we're looking at is right over here. This supply order block. Now, I'm going to remark everything as I had before so that you can understand where I was coming from with the price action analysis that we had. Let's go for 10. So this was our H4 supply order block here. Now the H4 supply order block here, let's take a look at it one more time. So we're tracing the liquidity. We had a strong short here. Then we had this reaction here, which was the initiation of a reversal. This was our weekly induction here, or the previous lows. All right, that's the first part. Let's get this line to be straight, please. Here. Then we had the break of market structure here. Then we had some sort of return, and now the price has made its way higher. Now, I told you that I wasn't really convinced by this return. And as you can see, if I take this line across here, see, all right. If I take this line across here, what you find is that the body of the candles actually closed beneath this low, which is what I was actually expecting to happen. All right. Now, in principle, the actual order block that we should be looking at for this movement is actually here. But I guess for the sake of what we're doing, we can actually use this one. But now, according to the rules, this actually doesn't line up because we need candles that are all the same color. And now on my dollar index chart here, if we zoom in, as much as this candle is a great candle, we could say that I guess these three candles together represent demand over here, or these two. And if you put it that way, then it makes sense. Okay, too. The only problem is that of course we had a blue candle after, then a red one that dropped a bit lower. So it's not the most clearest area of where the order block is. Okay, you can consider this area here or this area here. If I go to the D1 time frame, it might help to frame the range a bit better. On the daily time frame, this is the demand area. All right. So I'll go down to the H4 and then we can take a look. Now, mapping the H4 over, according to the D1, the demand range here is this liquidity range right here, this range of liquidity. Okay. And that's where we're operating from now. Because we have a H4 body close beneath the low, I do expect a continuation short, which means off the bat, I am actually saying that the dollar should continue to lose strength. Now, my only thing is that the mode of how the price is going to get there is also important too. So for me to lay this out, let's have a look at what actually happened. So we had our H4 order block here, and let me just put some couple of things out here. Now, when the market got to this high again with a spike, the price took the high of the previous week, which is going to be a weekly induction of the previous highs. And remember, I told you that time and price have a correlation together. So looking at this order block, I always told you that the price was going to break beneath here because of the price action we had here, how the market behaved when it came back to this swing low here. Let me know that we are going to go short at some point. And the price did go a little bit higher up here, just a little bit until it reached this point. Now, if you want to know why the price came to this specific point, all you've got to do is just look to the left here. And if you do, you'll see that on the H4, we have a FVG here. So we could actually map out where the high was going to stop at. And you can see to the pip, maybe a little bit extra into the supply zone here. The price wicked over here, and we've had a massive short for the rest of the week. All right, this was always going to happen. Now, because we've had this movement here, if we're looking at weekly or H4 FVGs, we have one right here. All right, and I'm just going to put this over here. Now, I actually use the term validation point. I don't use the term FVG. I just use it for the sake of those of you who are of the ICT discipline, which is becoming more popular now. So I use it for you guys to see what the price is doing. Let me just take this here and make this blue. All right. So we have another one of those over here. Now, don't get this confused. I don't trade support and resistance, so I'm not talking about that. Those lines may look like it. So we have the H4 VP. I'm just going to mark out the ones that we're looking at. We have the H4 VP here and one here. Now that we've had this massive rush down in price, my thing is that I want to see now we are in demand on the daily time frame here. We are in demand. So there's still liquidity in here for the price to go for a long. The second thing is that when we look at this order block, we actually haven't crossed beneath the 50% area of this order block. So the order block is not showing signs of breaking just yet. Now, I really do expect the price to get down here. Once we get here, that's where I believe all the buys are going to happen from for the next set of longs. However, coming back to the H4 anyway, what I'm looking for this week is to see how the dollar interacts with the low of last week. Now, last week's low is down here. And if we get a situation this week where we have a body close, let's start off with the continuation scenario. So the continuation scenario would be a situation like this. And I'm going to draw it like this and just take this line down here and drag it. There you go. Like that. So the continuation scenario, let's start off from there. Now, my thing is that this order block here, we have a very strong liquidity void. And let me do something here. I think I got rid of the screen by accident. I don't know what I just did. Hugo's Way. Give me 1 second, guys. The Hugo's Way terminal just kind of disappeared for a minute. I don't know where it's gone. But hopefully it reappears for us in a moment. But I actually don't know where the terminal just went. I don't know what's going on. All right, 1 second. Let me just do something here. Now, when Hugo's Way bugs out, all I've got to do is use the, I'll share my other screen for now and then get rid of Hugo's Way because I don't know what happened there. So I'm going to end the task quickly, guys. or Hugo's Way, and then reopen it again. I think maybe Hugo's Way liked my analysis so much that I got excited. I don't know. But anyway, let's come back here again. All right. So there we go. As I was saying, so we have two situations. So the continuation scenario here, and I'm going to type here cont scenario. Cont just means that continuation is just for space sake. The continuation scenario, let's put this in 8. I'll put this in, let's just go for purple. So the cont scenario here, what we need, I'm going to put a few bullet points here. So I'm going to put a quick bullet point here. So first bullet point would be a H4 candle body close beneath last week's low. Now, my thing is that even though I'm saying this, okay, and there's a prerequisite to what I'm saying. So continuation scenario would be this. Take off this line for now and this line because we don't need it. So the continuation scenario, let's go on the left. Now, my thing is because we have a huge liquidity void, there's two scenarios for this continuation. So scenario number 1 is this, just a straight closing continuation. A second scenario is that the price can come back up to, and I'm going to write this here, this H4VP / FVG, all right here. Fill out this liquidity void over here, and also come back to the other side of this demand order block. All right, so this is, I'm going to put this here, demand H4, demand OB for order block. Let's make this smaller, let's make it blue here, right? What my thing is that the price could also, as a second continuation scenario, actually do this. Now, for that to happen, for there to be a reversal, it can actually happen in 2 ways. Number 1, and I'm just going to put here scenario 1. All right. And this is scenario 2. All right. So what I'm going to do is I'm going to put this up here. Scenario 2 would be, I'm going to put a liquidity void fill. Liquidity void fill. And I'm going to put here, now I zoomed out, which I don't want to do. So first is going to be a liquidity void fill right here. All right, which is going to fill out this liquidity void. The second thing is also re-optimization of the order block. So I'm going to put here OB re-optimization. Yeah. These are the two scenarios that the price could do. All right. Now, with the second let's go with the first. Now, not every liquidity void that the market leaves, it fills out straight away, but there is a very good chance that the market would want to fill out this liquidity void. Now, in order for there to be triggers enough for that to happen, in scenario 2, the price would need to give us at least a wick close instead of a body close, because that can trigger a reversal because we are inside of demand right here. And then the price can give us a long here. Now, if that does happen, let's break down what the strength of the dollar would be. So that would mean in the shorter term, first, we'll have a positive dollar here. So it means, let's put this here in green. So we'll have a positive dollar here. And then we'll have a negative or bearish dollar over here. So negative dollar here. Right? So that will be that situation. The other situation is just straight bearish dollar. Now, it does depend on obviously some fundamentals too. There are a few times in history where fundamentals may override the technicals and the price may just continue to shoot down. Now, currently, we can see already that it looks as though the dollar index is gunning for the lows of last week. And depending on how the H4 close happens, it will really be the determinant factor to know what to do. Now, another kind of thought I want to go through is that if the price actually closed beneath this blue range right here and close beneath this order block, then I may not actually wait for the price to fill this liquidity void, because it may fill it at another time, which might be, and I do think I have another dollar index chart here. Yeah, I do. All right, so this is my analysis here. So you can see this is if the price gets here and it goes for a long, right? Now, if I clear all of this and I delete right here, and then I go down to the D1 time frame over here, if the price was to leave that liquidity void alone and not fill it out, then the price will definitely go for liquidity that is in this order block here, which will fill out this major unfulfilled efficiency of this liquidity void, and then go for a long. So then on the way back up, it will fill that out. Maybe there'll be, at that time of when the price is trying to fill it out, there'll also be news happening at the same time, because that's usually when those kind of things will happen. But at the moment, that's not the case. So if the price takes this low and we have the reaction, and my reaction I'm looking for is really when the price touches here. I want to see if the low will touch this swing high right here. If the price can get here, all right, and react to this reference point, this previous reference point here, that would be where, and I'll just, for the sake of the video here, here we go. So if the price is to return here and the wick of the candle wicks on here, so we have a reference point from this last, now we call this in the academy a HVP. So this last HVP right here, and then the price starts to go long, that would be the perfect setup to go for a bullish dollar temporarily, and then a bearish dollar straight after. And I think, to be fair, scenario 2 makes more sense for it to happen. This week, we don't have the greatest amount of news as well. I'm like looking at what we've had. I've taken a look this week to see what news we've got. We didn't really have the greatest amount of news going this week. All right. So because we didn't have the greatest amount of news going, how can I put it? I don't expect there to be the most major move this week, in terms of time and price. I definitely do think that is going to be a situation of, let's say, and I'll put this here. Yeah. I definitely think that this week we have news enough to cause the price to go long and short, but I don't know if we have the news to kind of push the price very heavily short or very heavily long. We'll have to see. Or maybe other markets might influence that. We'll know for sure. But looking at this anyway, my thing is that scenario 2 would make more sense to happen. Okay, now if the price closes above this order block, then maybe it might do a full return and then go for a short, which is even better. But these are my 2 main scenarios. I'm very much of the belief that the price is definitely going to continue going in a bearish direction. But how the price is going to play that out, we're going to see. Now, you can see the price is heating up very strongly. Before it's even 3 o'clock, we have quite a strong amount of bearish pressure coming into the dollar right now. If we match that up with what we've got going on with our pairs, you can see Euro USD from this cross section has done a fantastic long. Gold has done a very interesting entry. This was a pretty cool re-entry right here into this order block. They actually shot down and shot back up within an instant, which is pretty cool. Now, AUD/USD looks to be recovering some. Now, it's interesting because AUD/USD left equal highs on Friday, and this is the NFP move, and it looks like the price has come all the way back down to where the NFP news started from, and now it's taking off again. That's actually a pretty cool re-entry. I'm just not touching anything yet. It's just keeping the discipline to leave things alone. USD CAD is pushing on the other side, pushing down short. And Pound USD, of course, is going to be pushing long. Pound USD, where it came to, is a little bit different, but still, there's very much so evidence to believe that the dollar is going to continue weakening, because we have equal highs all the way at the top of this trend this morning, the US Asian session, which definitely the price is going to gun for later on. So I do want to see what the market is going to do with the price action going on. Now, taking this into consideration, I have another pair that I wanted us to really look at, which is USD JPY. And USD JPY has actually done a pretty lovely move that I'm very fond of. And I think Abdul Foyers really was the one that put me onto this. This was really like a really good, solid move going on there. But yeah, let's have a look and see. So anyway, coming back to this dollar index here, starting off, this scenario, these two scenarios here, I would say that I'm probably, again, looking for scenario 2 to happen more than scenario 1. Now, scenario 1, if it happens, we have a heavy amount of bearish pressure on the dollar. We may not get this whole return situation. And there are times the market leaves liquidity voids for a while and may fill them partially, but not all the way. Okay. Now, the higher the time frame, the longer it may take for a liquidity void to get filled out. So for example, on the H4 here, this is a massive liquidity void from this swing high until this point right here. We have 40 pips, which is pretty wide. For this gap to be filled out, okay, it doesn't have to happen straight away, but let's say a 1 minute liquidity gap or 1 minute time frame or 5 minute even, those can be filled out pretty quickly. It doesn't take as many pips. It doesn't take as much money to fill out those liquidity voids. It doesn't take that much price delivery mechanisms going on for the market to fill out those kind of voids, right? Or even gaps. But with the higher time frames, H4, H1, D1, it can take a long time to happen. If I show you a quick demonstration of what I'm talking about, if I go over to the dollar index here, right here, if I went to the dollar index and I put standard and I went to the weekly here, all right, we have a liquidity void, an obvious one here that will be filled in the future that has been left behind from this range here, specifically, to the low of this range to the swing high here. Now, this liquidity void has been here since last year, November. And right now we're in July. So not too long it will be a year. 4 months from now will be a year. And this liquidity void hasn't been filled till now. Okay. If we go over to look at some other demonstrations or examples here, we have on the monthly right here, we have this liquidity void that hasn't been filled out and may potentially be filled out. That's another scenario here. If I was to draw this supply flip zone here, which is where my focus is at, and add on this range right here, I guess one reason why I'm bullish on this is because the price is at equilibrium. It's still holding there, hasn't really gone past that area. And we're inside of a deep area of liquidity that can push the dollar for a long. However, we do have a liquidity void on this side here that could be filled and push the price to 99. Or we could have another liquidity void filled on at 109. All right. So my thing is that looking at price, we got to be watchful of what time frame we're looking at. Another major and obvious liquidity void that we have here is if I start from this low down to over here, this is a liquidity void. All right. There's been no price delivery back on the other side of this market in this range here. So we still have a major liquidity void from 81 all the way up to 88, never been filled. Okay. Another one. Now, I like to consider the large candles that have hardly any wicks as the liquidity void more than just, candles all in the blue. So if I took this candle over here, which is kind of in whitish right now, and just change the color really quickly, and then we can go back to the point. Let's just take this violet color. So over here, partially the liquidity void has been filled about 50% of the way with this low, but there's still a little bit more left to fill this liquidity void to around about 99,560. All right. So this is what I mean when I say liquidity voids may not always be filled completely. All right. So with this H4 scenario, really is the determining factor for how we deal with the price right now is how this H4 candle works with the price. Now, for me in the UK time, right now, the next candle is going to form at 5 p.m. UK time. Right now it's 2:56. So there's still 2 hours left to see how the price is going to behave beneath this low before we make a suggestion on what to do. All right. Now, if the price closes at 5 o'clock with a heavy body close down here, or it closes past this reference point, then I'm sure I'll be sure the price is going to continue going short on the next candle. All right. We only have 2 H4 candles left in reference to where we're going for. So this is really the idea that I'm going for when it comes to the price action that we're looking for. Okay. So with that in mind, I could tell you now, I mean, I gave you guys this scenario and this trade already, and it played out really lovely. Zoom out. Now, because a lot has happened, it's going to move around my marking. So I'm just going to have to put it like this. All right, here. I think I was on the H1 with this one. So yeah, there you go. I'm going to zoom out a little bit. This was the H4, H1 demand cross section. This is the unfulfilled efficiency. And then bam, the price came back to this low one more time, twice. And then it's gone for a long. Now, this line, I don't draw trend lines, so I didn't do that. That wasn't me. But you can see the price has done a fantastic long and it's still going. Okay, and the target is basically at the top of this range. Pretty good long. Really, really nice trade. Now, with that being said, looking at things like USD CAD and the rest, I do expect them to continue going short. With USD CAD, we had a bit of a discussion here that I'm expecting the price to come back down to this order block before we get the major long, all right, with it. So there needs to be some sort of bearishness. Most of the currency pairs are pushing to or signaling towards some sort of long scenario to get to a major point before a major sell. You know, USD CAD is probably one of the more obvious ones because we need the price to get down here. But for me, in this scenario, and I'll give you one major kind of trade I'm looking at this week. Now, when the price gave us this induction here, if I go down to the M15, the price action was actually really, really nice. All right. Now, if you remember on the live, I had these kind of equal highs marked out here. And you can see that on the Friday, the price came for these equal highs perfectly first before heading down for a short. We had these relative equal highs here that the market also came for, but it also wanted to get these highs right here, which is really where my trigger point was. Now, I wasn't behind the charts on Friday, which is coincidentally the time that this happened. But either way, anyway, this is the price action I looked at. Now, the price was perfect. It filled out even these 15-minute fair value gaps right here. And then we had the break beneath this demand zone return. We had about a couple of entries here with an accumulation here, and then a massive short down 100 pips. So stop loss would have been above this high at 5 pips. And then this would have been the target here, 100 pips, which was brilliant for the day. Now, my thing is, on Hugo's way is saying to me that when the NFPs came out, which is where this gap starts, that there was a liquidity gap left behind. On my IC markets chart, because I tried to get some clarity on this, I'll show you my IC markets chart really quickly. On my IC markets chart, there's a liquidity gap here at 133. But there isn't a liquidity gap here. Now, the price does look a bit funny because over here we have a close here and the open opens up into the close of this candle and then just continues going down. We have a few other little gaps over here, but not really the same as Hugo's way. On my other live account, which is, I like to do comparisons between all of them. On my other live account here, there isn't any gaps over here on the price. Okay, so there's a little bit of a conflict of what is going on right here. Okay, Hugo's way saying there's a gap. Other pairs are saying not. Now, I usually go for the majority, and the majority is saying there is no gap. So the price may not come back here. Now, if we're lucky enough and the price did come back here, and how would that happen? I'm going to explain to you how. So if I take this supply order block here, which is going to be my principal order block of operation, I'll put this over here. Now, if I draw a line beneath the low over here, and then we compare the dollar index really quickly. So I'm just going to put a line here. Right. All right. So if we do this, imagine if the price came beneath this low right here and gave us some sort of induction here, like a trigger for a reversal to fill this gap. If this gap is actually true, then I'll be looking for a sell entry right back over into this order block for a massive short continuation here. Now, how could that happen? And I want to kind of draw your mind to why I analyze the dollar index the way that I do for you to see what I'm talking about. Now, if we go back to the dollar index H4 analysis, remember the situation with scenario 2. Now, scenario 1 is pretty straightforward. Just continue selling, nothing much really going on, just continuation short. Scenario number 2, though, if the market was to be a bit more strategic here and fill out this liquidity void and re-optimize this demand zone for supply, that movement here would give us a positive dollar temporarily. Now, if I map that with USD CAD, which is over here, don't you see it would be the same thing? It would be a situation where the dollar gains strength, which would be a long, and then the dollar then loses strength a little bit further down the road, but for a longer period of time than going long. And that should push us down to a scenario where we can get this sell all the way back down to this order block here, and probably even beneath this low possibly. You see me? You see my screen, sorry? You see what I'm saying? So this is why I'm watching the price with the dollar index reaction very carefully, because we might end up getting really 2 possible good trades, a very nice long of USD CAD back into this order block here. And then from this order block here, pretty good sell. And I would probably use not this swing high, but this one right here for a stronger sell that will put us back into position for a pretty nice 2-trade scenario. Now, it doesn't happen every day where the market offers such a scenario, but we could have that. Now, even on the M15, we've broken market structure pretty nicely right here. So if the market was to trigger this by 5 o'clock today, then into tomorrow, if it's not today, I'll be looking for the price to take these lows and give us a long scenario. And we can ride the dollar all the way up. So we'll take USD CAD. And whilst we're taking USD CAD, if that was to be the long scenario here, and I'm just going to put this out here. If this was to be the long scenario and USD CAD was giving us a long, what would be brilliant about it is that as it fills the liquidity void, we'll be closing USD CAD wherever it is. So if USD CAD is closed, maybe up around about here, and we see the liquidity void is closed now, we're going to open a sell and close the buy and milk all the profit on the way down. So USD CAD really, to me, looks pretty juicy. And if this liquidity gap is in fact true, then we've just set ourselves up for a pretty good move. So this is why I would say to you guys that we should be keeping our eye out for USD CAD as a layout. That's my main top pair that I'm looking at. All right. Now, as promised, I'm going to go through the news. Let's take a look at the news and see what's going on. So this week, again, I told you there is high impact news, but I wouldn't say it's the kind of high impact news that can create the most amount of pips, but it definitely can do something. So if we start off with Monday, what we've had so far, we have high impact news coming in at 4 o'clock, which is a speech from Governor Bailey. So not really related to USD CAD per se. And we also have 2 speeches which are medium impact from governors within the Federal Reserve. Tomorrow, Tuesday, we have 7 o'clock, and this is all in UK time, by the way. We have the claimant count change and the ILO unemployment rate situation at 7 in the morning. All right. On Wednesday, we have the Royal Bank of New Zealand's interest rate decision at 3 o'clock in the morning, which is definitely going to cause some massive movement. At the moment, the Royal Bank of New Zealand's interest rate is at 5.5%, which I've never seen in my lifetime. It's amazing to see how crazy the market has gone. And then there's a speech an hour and 10 minutes after from the Royal Bank of Australia's Governor Lau. So all of that being said, we may actually see, some major price action at night. But I've learned my lesson that when the Asian session reacts the way it does, if the position is not already set from before, don't bother to try to get in, because you'll probably get a re-entry in the London or probably even the US session, most likely. Now, we do have some high impact news here, which does have a lot of consequences for how the price will behave. And that is going to be the consumer price index news. We've got now CPI is right now such an important factor to pay attention to when it comes to inflation. Is a very important and related figure. Now, at the moment, it's saying right here that the previous figure is 4% and the expected is 3.1, which is almost 1% down in inflation. If that is the case, then the dollar is going to have a heavy time going bearish. And if that does happen, then that will be a very good reason why the dollar index will crash down. Now, if this news is going to come out to be true, this is where we can go for timing. If USD CAD is going to give us a long, it's going to have to give us a long between now and Wednesday morning, which, because USD CAD is not a US pair, to do that in the morning, which is when I'm talking about morning, UK morning, which is London session, I wouldn't be expecting much from it. All right. And this is if the news is bearish. Now, it may not happen exactly like that. It might do something different. But if USD CAD is actually going to go for this long that I'm talking about, it needs to literally do it tomorrow. If it doesn't do it tomorrow, then it just kind of hangs around before this news. Well, we'll have to see anyway, because they might actually use this news to go for a positive move to give that second re-entry and then reverse the price a little bit more slowly the other way back down for a sell. All right, so we do have very high impact news that can actually move the market. We also have the Bank of Canada's interest rate decision, which it looks as though they want to increase their interest rates of 5% from 4.75. And just looking at the major economies around the world, it does make sense for them to push up an increase. So Canada's inflation is still persistent, which is why they had the pause last time. It wasn't, so they didn't change their interest rates. Then USD CAD, this is another reason why USD CAD will be going crazy. So USD CAD to me is probably in my scope more than any other pair, because we could make the most money from this pair, moving forward from here. So let's be prepared for what the market is going to have. Now, it could be a situation where USD CAD actually does the long with this news and the short with this news. Wouldn't surprise me at all if that was the case. All right. So moving on to Thursday. Thursday is a little bit more, or a lot more quiet. We do have the producer PPI, which is basically the business version, or the producers of the stuff that consumers consume, their index, which does have an impact on the economy. So that 1:30 news might be used to do something. We'll see. And then moving over to Friday, the only high impact news we have is the consumer sentiment index. All right, which does have meaning. I told you, if it's the further the value is above 50, the more, in essence, consumers have confidence to continue spending in the economy and not saving. The lower it is, the less confidence. And if it gets below 50, the confidence is tipped towards let's hold on to our money more than let's spend, which is not really great for the economy, because that's another issue for another day. But this is really the outlook. So guys, Wednesday this week is going to be a very particularly important day, but I'm sure that Tuesday is going to kick off with a lot of price action movements. So this is what I'm saying, guys. So I'm watching this low right here, and I'm watching the dollar index. You can see right now is really pushing beneath here and is coming to this reference point low. Now, because we still got an hour and 50 minutes left, we wouldn't be able to say, let's go and start selling until we know what the market is trying to do. All right. Now, my range of looking at where the price may reverse to fill this liquidity void is from this reference point all the way down to possibly even this low. Because if the price came beneath this low, there's definitely going to be sell stops beneath here, and there's going to be some stop loss liquidity. If the dollar index so chooses to, it actually could push down beneath this low and then produce the low. Okay, but 5 o'clock is the time to look out, UK time, all right? So for those of you watching from the UK, we're going to wait until 5 to see what the market's going to do, and we're going to come back and see how that plays out. All right, peeps, so I'll catch you guys later on. It was really great having you on the live as always. Thanks for the likes and comments and stuff, and I appreciate you guys. I'll see you guys tomorrow.